Okay. We have Irv Selman from Selman Insurance that we're going to interview today of Selman Insurance, and you are located in Woodland Hills?
Yes, I am.
Okay, and today in this interview, we're going to talk about particularly life insurance, annuities, and life settlements. Is that correct?
That is correct, yes.
Okay, great. So how long have you been in the business? Tell me a little bit about you.
Okay, I got into the life insurance business shortly after I was discharged from the U.S. Army, 1968. And that's all I know. That's what I was trained for. And it's been a long time. I've been, going through the evolution of various products and, different ways of different types of life insurance.
Okay. And we know each other from the Foundation for Senior Services group, and I think also Senior Services.
It's Senior Services Group is SSG, and
Senior Services Group,
and the Foundation for Senior Services is the nonprofit underneath SSG.
Got it. Okay. And we're both members of the San Fernando Valley chapter, and I just joined and had the pleasure and the fortune to meet Irv, and so that's how we got connected. Glad to be a part of that and to get to know you a little more. So let's start with life insurance. What types of life insurance are mostly commonly recommended for seniors, and why?
Okay, well, there's basically three types of insurance, life insurance. And number one, I am a broker, just so you know, which means that I represent most of the major companies. I don't work for any particular company, so I shop the marketplace, try to get the best possible price and quality for my clients.
Perfect.
Three types. There's term insurance, there's whole life insurance, and universal life insurance. And in the universal life insurance, there's various types of universal life. Term insurance, I do not recommend for seniors unless there's a specific need for a specific period of time, because the way it's priced is it ends prior to life expectancy. Less than 2% of all term insurance policies actually result in a death claim. And that's not good. So people are paying all that money into a policy all those years and winding up with nothing once it cancels itself, or you just stop paying for it. The universal life and whole life are the what I would recommend. I shy away from whole life, even though I grew up in the whole life business, and that was the strongest long-term type of insurance. Universal life is a flexible premium life insurance policy, where whole life is not. It's just a guaranteed premium at one price. You can go from minimum premium to a very high premium, depending if you want to build cash values. Many times I represent what's called a guaranteed universal life, which is called a GUL. And what that is a policy that is guaranteed premium to a certain age. Could be 85, 90, 95, or 100. And the cash value buildup is very, very minimal. So you're not doing it for cash. You're just doing it to try to get the maximum coverage for the least amount of premium. And that is the most popular. But there's also what's called indexed universal life, which is a little more costly. You do build up cash values. And the beauty of that is that you participate in the money is invested into an index like the S&P 500, Dow Jones, whatever. There's several hundred indexes across the world, and you can pick and choose an index, or the company will do it for you. You participate in the gains of that index, a certain percentage, for 50, 60, 70%. So if the market goes up 10% and it's a 60% index, then you get 60% return. But the beautiful part is it has a 0% floor for most companies, which means that if the market loses money, you're locked in at 0%. So you don't make any money, but you don't suffer the losses. You don't participate in any of the losses. But I find in the senior marketplace that the GUL, the Guaranteed Universal Life, is probably the most popular, and it also
Mm-hmm.
fits the budget a lot better because it is less expensive.
Oh, okay. Wow, that's a lot of great information that half of I wasn't aware of. So that's very helpful. That's great. Thank you for that. What about, can you explain how the death benefit can be used to benefit a senior's family?
Yes, the death benefit number one is tax-free, which means that even if it's $1 million policy and the beneficiary received that there are no taxes paid on it. The money can be used for anything they want to use it for. They can take that round the world trip. They can pay bills, pay off the mortgage, whatever they want to use the money for, they pay the money. I suggest that with people who have trusts, do not put it into the trust. Do not name the trust as the beneficiary, because that does two things. Number one, it inflates the value of the trust, and it might take them over the threshold of the federal trust taxes.
Mm-hmm.
Most likely it won't, because we're up over, I think, 11 to 12 million right now. As far as
Mm-hmm.
anything over that amount, you have to pay taxes on. But the most important thing is that if a death claimant a claim is filed, the claim can generally be paid within a week to two once all the paperwork is in, if it's a direct beneficiary. If it goes into a trust, then it takes time for that trust to be settled, sometimes 6 months or a year or even longer. So the people who are beneficiaries of that trust have to wait much longer. So any named beneficiary, keep it out of the trust, I would suggest. But of course,
Okay, great.
no, I say, but
No,
of
go
course,
ahead.
you consult with your your attorney or your CPA on that.
Right, on how to best advise
Mhm.
you. Okay, cool, great. Before we move on to like annuities or life settlements, is there anything else about life insurance that you think it would be helpful to be aware of or talk about?
Nothing really. I think that it's very basic. Most people know about life insurance. The thing is, it's very important to sit down with a licensed agent. I would suggest a broker, not necessarily me, but any broker. We all have access to the same companies, uh, versus a captive agent, because a captive agent works for the company and they sell uh, the products of that particular company, and it may or may not be competitive. Not all companies are competitive in all areas. So that's why it's
Mm,
important for me, when I sit down with somebody, I need to know their age, their gender, their medical history, because certain companies will treat heart conditions differently than others, or cancer differently than others. And so you need to sit down with a knowledgeable broker who can guide you in the right direction.
I would like to probably add in too that correct me if I'm wrong. I think also getting a referral from someone that you know, like, and trust is also a good place to start too, or from a family member or friend, so that it's a reputable and professional. Would you agree with that?
Well, absolutely. Referrals are the strongest way that I do business, because number one is I don't have to sit there and spend time with a person telling him, my credentials and if I'm good or not. Once somebody says to you, talk to so and so, he's a good guy, then all of a sudden you just can basically go into the education of life insurance and let them decide. I don't tell people what to buy. I lay out all their options and let them decide for themselves. Whether I agree with it or not, that's not important, because my feelings shouldn't impact how you decide you want to conduct your business.
Sure. Yeah, yeah. That makes complete sense. I like that a lot. Thank you for that. So it seems to me life settlement, since we just talked about life insurance, would be the natural segue. So what should people know about life settlement?
Okay. First of all, a life settlement is a sale of a life insurance policy to a third party. And why is that important? Because last year, according to the Life Settlement Insurance Association, 2.5 million seniors canceled their life insurance policy. 500,000 of them were term insurance policies. So these people walked away with very little or nothing. The other 2 million where they're cashing in their universal life or whole life policies. And the reason they do it is because they no longer have a need for it. They don't want it anymore. They can't afford it. With term insurance, it may be coming to the end of its term, but the whole life and the universal life that they're cashing in, if a life settlement typically gets them 3 to 5 times more value than you would cashing it in. When you cash in a policy, you're basically selling the policy back to the insurance company. I'm saying let's sell it to a third party, an outside third party, and get more cash for your money. Now, what happens is the outside third party then becomes the owner of your policy, and they become the beneficiary, and they're responsible for paying the premiums. You don't have to sell the whole policy. If you want to keep part of it, you can. I recently had a gentleman who had a $500,000 policy and wanted to keep 250 of it. So we only sold the 250 instead of the 500, and he kept the other 250.
Interesting.
Life settlements typically, people are surprised how much money you can get from a life settlement. I'll give you some examples. I recently had, or within the past year, an 80-year-old gentleman who had a $300,000 policy. Over the course of his life, he's paid $90,000 in premiums rather. He was down to 20,000 of cash in his policy because he's been borrowing it. It was a universal life policy. He's been borrowing to pay premiums, and one more premium payment would have wiped out the cash in the policy. He needed the money, so he decided instead of paying the 1 year and borrowing the money, he's going to take the 20,000. I asked him to give me 3 months. Let's see what I can do. I was able to get him $115,000 for that policy, more than the premiums he paid. I had a 72-year-old woman that had a $250,000 policy, and it was a whole life policy. She also was borrowing on it. She had $6,000 of cash on it. I got her $30,000. Then I had another woman who's in mid-70s. Now, I'm a broker, as I said before, and I also am a broker in life settlement market. I have over 30 different sources that purchase life insurance, and I'm going to tell you why that's important. I had this lady in her mid-70s. She had a $500,000 policy, and she wanted to get rid of it. And we got a bid in. The first bid was $17,000. And she said, let's take it. And I said, no, let's not. Let's wait and see what happens till I get the rest of the bids in. Then I got a $25,000 bid. Then we got a $33,000 bid, and we finally settled at $45,000. If she would have taken it first. Now, the interesting thing is that the $45,000 bidder was the same bidder as the $17,000 bidder. So when people bid on life insurance policies, they try to get the best possible price they can. Like any of us go out into the marketplace and we want to get the best price. But by being a broker and putting out for a bid and forcing the action, I got her from 17 to 45 with the same bidder. So that was really, it made me feel good. It makes me feel good when I deliver these checks, to these people, to these seniors, because they can really need the money to pay for, you can use it any way you want. They need the money to pay for the care that they may need, pay down bills. I worked with a mortgage broker recently on what's called mortgage, a reverse mortgage. And he was telling me that he had a client that he felt really bad for, that he could not get the reverse mortgage on it because he had not enough equity in the house. So, but he had a life insurance policy. So I said, let's see if we can do something about that. We were able to sell the policy, took the proceeds, put it into the equity of the house, which gave him the reverse mortgage and eliminated his mortgage payment. So instead of taking the cash out himself, we just put it back into the house. So there's many uses for a life settlement, and I think it's so critically important to educate. It may not be for everybody, but it's for those who are going to be canceling the policies, and it's very, very important. I think that people know about it and where to go, because
Mm-hmm.
last year, out of the 2,500,000 seniors that canceled their policy, only 3,100 life settlements were done in this country out of 2.5 million.
Wow.
So all that money left on the table, all these insurance companies. And so that's why it's very important that if it's not for you, it may be for somebody you know.
Mm-hmm. And it sounds to me like, correct me if I'm wrong, that this is very important conversation in also planning early on, so that how you want your estate, your estate planning to be, and that life insurance as well as life settlements can be used as a tool or strategic tool in certain ways for people as we age.
Absolutely.
As you just did mention.
Yeah, absolutely.
That yeah, that last case of with taking the money and putting it back into the reverse mortgage,
right.
So that they can start getting payments again. I would assume
right.
that was what the purpose from the reverse mortgage lender.
Right. And also,
Right.
one thing I want to point out that it's a highly regulated industry, especially in California, to protect the seniors. And besides having my life license, I have to have a special life settlement license, go through all these background checks, do ethics training, and so on and so forth. But when a deal is made, the senior is very well protected. They say, yes, I want to go ahead and do it. Contract is sent out to them, and that contract gives them 30 days to change their mind. It's a 30-day escrow, and the money's put into escrow. 30 days to change their mind. Within those 30 days, the beneficiaries have to sign off besides the insured, and also a letter of competency has to be gotten from the insured doctor to make sure he's in the right frame of mind to make that decision.
Mm-hmm.
None of those features are done, then there's going to be no deal. It's all for the protection of the senior. We don't want anybody coming to us that my dad was 89 years old and he has Alzheimer's, didn't know what he was signing, didn't know what he was doing, and so we're going to sue you.
Mm-hmm.
It's to avoid all lawsuits. So beneficiaries are involved, and the letter of competency from his doctor
is crucial.
Yes.
Yeah, that makes a lot of sense. Okay, that's awesome. Really helpful to know. Before we move on from life settlements and go on to annuities, is there any last thought about life settlements that you'd like to leave off on with that discussion?
Well, the only thing I can say is I can't stress enough how important it is to have it in the back of your mind for everybody, because it's not for everybody, but it might be for somebody you know, and it's so important. And people, if they want to buy car insurance, they know where to go. They want to buy life insurance, they know all the companies and maybe get a referral for that, but they never think about life settlements, and they don't know it's available. They don't know how helpful it can be. And it just from education point of view, it's important for people to know what it is. And I can't stress that enough.
Yeah, particularly case in point, the reverse mortgage example that you brought up. That's amazing. A great story. Thanks for sharing that. Okay, so let's talk about annuities. What are annuities, and what types of annuities are best, do you think, for seniors?
Okay, well, there is no best annuity for a senior in general. It's all individual. Annuities have evolved over the years. When I first started in the business, you pay a monthly premium over a certain period of time, and then it'll generate an income. Now, that is still true today. However, those were just fixed annuities, just straight annuities, and we can project what income you'll get in 20 years, 30 years, 40 years from now. But it's evolved. Right now, there are various annuities. There are variable annuities, which you need to be security licensed to sell, which I am not. I used to be, but I gave up my securities license about 15 years ago because I did not feel that I was doing my clients any good, because I really wasn't concentrating in that area, and I didn't feel comfortable giving them that type of financial advice. So I gave that up. but there are indexed annuities, and just like an indexed universal life, it has the same features, except it's an annuity. It will build up cash. You participate in the index that you invested in. You participate in their earnings, and you have that zero floor or 1% floor, depending on the company. But there are now fixed annuities or multi-year annuities, multi-year guaranteed annuities, and it's called the MYGA, MYGA, in our
Mm-hmm.
vernacular. And what that does, it gives you a higher percentage than you can normally earn if they don't need the income to buy an income producing annuity. They want to build up cash values, and they have money in a savings account, CDs, money market. It gives you a much higher percentage than you can earn. Give you an example. They typically go from a term of 1 to 10 years. And I just, matter of fact, I was just putting some numbers together, like a 1 year annuity. And once again, I'm a broker, so I shop the marketplace because a lot of companies participate. 1 year annuity for a $5,000 minimum, you look at 4.25%. The 3 year is 6.05%, and so on and so forth. And depending on how long you want to go, it will vary with the amount of return you're going to get. But those are not FDIC insured, but they are backed by the general assets of some major insurance companies. So they're safe because
Mm-hmm.
insurance companies, especially in the state of California, have a reserve requirement that for every dollar they take in and for their potential claim or payout, they must put a certain percentage of that into a reserve account. And also, the state of
Mm-hmm.
California has a guaranteed fund for any companies that are going bankrupt or are, people are not going to lose, not in this state. So it's a very safe investment, and the money is not accessible. It is accessible. You can typically take out 10% annually without a penalty, but depending on the company, depending on the amount of years, there is a penalty, just like with a CD. But
Okay.
you
Mm-hmm.
do get a much higher rate of return than you can typically. And that
Okay. And so, I'm sorry, go ahead.
no, I'm just saying. So if a senior comes to me and says, I've got $250,000 to invest, and I ask them, are you looking for a guaranteed lifetime income, or are you looking for growth? And if they say guaranteed lifetime income, then I'll shop the market once again, and I'll see the best possible return I can get for him or her. And it could be a lifetime income for an individual. It could be a lifetime income for a husband and a wife. If one dies, to continue the income. And also the return is dependent on whether you want a lifetime income that ends at the date of the death or the second death, or want to guarantee it for 10 years, or do you want to guarantee it for, whatever. There's different various amounts of income depending on the type of annuity that you get. So that's their decision, but I present those facts to them.
And you said that you let go of the license that you need to be able to sell annuities.
No.
When you have
No. I can sell annuities. I cannot sell a
okay.
variable annuity, and that is stock market based, meaning that the underlying
Oh,
investment are stocks.
okay.
Okay.
Got
And
it.
so if people want that, I will refer them to someone, but that's
Mm-hmm.
a lot riskier than the annuities that I deal with.
Okay. My apologies. I misunderstood. Then that's good to know. So just lastly, so how do you work with the families of seniors to make sure everybody's on the same page
Well,
regarding insurance?
I generally like to sit down with them as a family,
Mm-hmm.
and I will ask them probing questions. I'm not going to give advice until I know what it is they're looking for and what their risk tolerance is. And Another thing when it comes to life insurance and life settlements, and I forgot, it's very, very important. There is called in most companies, most policies, an accelerated death benefit. And what
Mhm.
that means is that if a senior is terminally ill, a year or less to live, you can draw down on the death benefit up to a certain percentage and a certain amount. Typically 50%, not to exceed $250,000. So if you have $1 million policy, you can draw down not to exceed 50% or 250. You can draw down $250,000 to help you pay bills or whatever it is that you need to do to continue on with your life or live what's left of your life out in a pain-free environment or get the help you need. And your $1 million policy reduced by that amount of money. It's much better option than life settlement because you're still leaving some money to your beneficiary. Okay. And I was
Mhm.
going to bring that up earlier. I forgot, but it's very important to look at that. When I run into a senior that needs cash because they're dying, they need to pay for something. The first thing I look at. I also had a senior who was 93 years old who wanted to sell a $600,000 policy. So I said, before we do that, let's sit down with your wife is deceased and had a son and daughter. Let's sit down with your son and daughter. And because I felt a little uncomfortable because at that age, I didn't think it was ethical unless it's something they really wanted to do. And I just wanted to make sure that the beneficiaries, the son and daughter, were involved in that decision, not just him. And so we
Mhm.
decided no, he couldn't afford the premium, but the son and daughter decided to pick up the premium. And so it worked out really well for the family. Not for me, because I didn't make a sale, but it worked out well for them. So what I try to do is I just try to educate and I listen to people and I give my advice based on what they tell me.
The questions, the particular questions that you ask to draw out certain types of information to properly assess what their needs and wants are, that's so great. And the care in which I can tell that you take with your clients just from this interview, it's incredible. And I will definitely recommend you to any clients of ours that we come across that need insurance in this way. So I appreciate that. And that you were able to make the time to do this interview with me today too.